Hi there, it's Jeff Cameron with Keller Williams saying hello. I want to give you my market update. We just got back from San Francisco, went out there to watch the Cardinals play Monday Night Football, and unfortunately they disappointed us. But we had a great time. I love San Francisco. We stayed at the Wharf. Anyway, if you want to talk about that, give me a call. Let's get to the market update. Today I want to talk about the difference between a retail, which is an owner-occupied with equity home, a short sale, and REO, and how they've affected our market this year. What are the sales numbers? So far, year to date, 57% of the homes sold have been bank-owned, REO properties. 16% are short sales, and that leaves 27% that were retail homes. Of the homes available today on the market, 15% are REO, which when you run the numbers, that means there's only a 1-month supply of homes on the market. 28% are short sales, which is a 7-month supply, and 57% are retail, which is an 8-month supply, which really, in a nutshell, the REOs are flying off the shelf. The retails, they're finally coming down and lowering their prices to market value so they'll sell. And then the short sales, there's a bunch of those out there, and those keep increasing because people want to save their home. Save their credit. I also want to talk about the average price per square foot. This doesn't mean you compare exacts, but to give what the average price per square foot with an REO, we're looking at $82, $70 price per square foot, which is up 6% from January. The short sales, they're $82 price per square foot, which is down 13% from January. And then the retail homes are averaging $111, which is down 12% from January. And what does that all mean? It doesn't mean that you have two exact homes that a retail can sell double the REO. It may sell for more, but it's all based on condition. What it means is that more of the lower end homes are going into foreclosure. More of the upper end homes are either selling as a retail or as a short sale. And that's just a factor of there's a lot more money involved at a higher end. There's a lot more people involved to try to stop that home from being foreclosed upon. News that you may have heard out in the last couple of weeks, but especially over the last couple of days and last week, Citibank, Bank of America, Wells Fargo, all those big banks they're giving back the TARP money to the government. And they're giving it back because now, basically, there's only one reason. They want to be able to hand out big, huge bonuses. It's coming to the end of the year, and it's bonus time. Those guys that got us in all this mess, they're going to get hundreds of millions of dollars while average Americans are out on the street. But such is life, and we can't control that. They've given back now $141 billion, or 44% of the TARP money. So the TARP, it has worked. It saved the failure. We've gotten 44% back. There's still some huge stakes in banks. There's still the possibility of recouping all of that money. I hope it happens. If you're someone out there that's having a difficult time right now, there are ways to save your home. Loan modifications, short refinance. Ran into that. I posted a video on that last week. Forbearances, we have somebody doing that. All of these things can save your credit. Lastly, we would help you with a short sale if that's the last resort. You don't want to do a foreclosure. It's 4 to 5 years so you can buy a home again, whereas with a short sale, it's 1 to 2. And who would have thought we would have been where we are today 3 years ago? Anyway, that's it for me regarding the market. I want to say happy holidays, Merry Christmas, Happy Hanukkah. Enjoy your family. Have a great day, and I'll check in with you next week. Thanks, Jeff Cameron, Keller Williams.